All right, so the broad market open under pressure. Doing a little better now, CP effect, right? Here's one thing that's really going well. Software names. This is about an hour ago. These are your top performers in the S&P. Software name, software name, software name, and another one, software name. So people are buying these software names. We've been talking about them getting absolutely hammered. Sort of the thinking is maybe now is the time. Now, here's the thing. They've been getting hammered, right? Since the unveiling of ChatGPT, the hardware super performance against, and we're talking like semiconductors mostly, been just outrageous against software. So this is software and hardware. Hardware, is particularly the semis, have just crushed them. They've never crushed them this much. Of course, the epicenter of the problems for the software has been software as a service, SaaS that they call it. Super duper hot a few years ago, hasn't been the same in a long time. But there have been winners. Look, last year Palantir did extraordinarily well. The question, though, is like the decliners. These names were huge. They're popular. You can't ignore them. And the narrative is that AI is eating their lunch to the point where there's no return. Now, if that's not the case, there could be a lot of money to be made on this dip. So let's bring in who I consider the best software analyst on the street. Joining me now, co-head of U.S. Software Equity Research at Citi, Tyler Radke. Tyler, I want to start with this table, right? So you got the stocks that were up, year to date so far, this year to date rather, 2026, then the ones that are down. Is there some commonality with this?
Yeah, so I think what you're seeing, and clearly as you pointed out, a lot of more stocks that are down than up, but the ones that actually gave you positive returns, what did they have in common? As you can see, they tend to be faster growing, but those growth rates actually improved as the year went on. So this has been a story of revisions. Generally, as you pointed out, you've seen the positive revisions in hardware and semis, you haven't seen it in software. Right. So the names that do the best are the ones that give you those positive revisions and have an positive AI story.
I mean, we saw Mongo had a great earnings report not long ago. The stock exploded. Yep. Net has had a great earnings report. Now, so these names here, then I would be particularly more concerned than if the names on this side. You have to know that the earnings are going to somehow start to turn around or they'll pick up momentum.
Yeah, that's right. And look, I think I'd love to tell you everything in software is a buy. It's all overdone. I think you still need to be selective.
Creative destruction, though. I mean, are we seeing that in real time, though?
I don't. So what's interesting, many of these big underperformers, like let's think of Salesforce, Adobe last year. None of them missed numbers.
Right.
You saw earnings go higher. You saw revenue go higher, but it wasn't by a significant margin. So what are investors worried about? It's the terminal value of these businesses. What's going to happen in 5, 10 years as AI continues to get more powerful?
Okay, so I put this board together, maybe a little hyperbolic. Will they survive? Yeah, they'll survive, but software was an unstoppable name, right? I mean, just a few years ago, they put it in the Dow Jones Industrial Average, took out ExxonMobil. ExxonMobil's up 300%. This is down, okay? But people know these names. I'm in this stock. My subscribers, we're down.
Yep.
What's the prognosis for them?
Yeah, well, look, I think we have different views on all of them. I'd say we're probably the most constructive on ServiceNow and HubSpot versus Salesforce, but clearly they've all underperformed. ServiceNow, they report on Wednesday, so we're thinking it's going to be a good quarter. We picked up some signs of budget flush. We think they beat and raise. Obviously, you have a great CEO, Bill McDermott, who I think does one of the best jobs of sort of articulating that AI value proposition that ServiceNow has to its customers. So we are looking for that to sort of revert and be back in the winner's camp.
And there are some names that you like. You recently have upgraded some targets on some names, including Microsoft.
Yeah, and we've liked Microsoft for a while. I think what drives our conviction there is their Azure revenue. They've been spending a ton of money on CapEx, and we've seen this, but that is going to translate into higher revenue later this year. And so we think they have a big new agreement with OpenAI that's going to raise a bunch of money. We think that is going to accelerate growth later this year. And then, we also upgraded Zoom in Palantir.
So I was in Zoom, and I just got out. I couldn't take it. I just couldn't take it. But it seems like a slam dunk, just without being a world's greatest software analyst, just like a slam dunk. Everyone uses Zoom. It was up big. It gave almost all those gains away. It feels like the risk reward is phenomenal.
I think it is, and we used to have a sell on Zoom. This is the first time we've ever had a buy on Zoom since in the last 5 years at least. And really, I think the thesis is number one, Zoom's not going away. If you and I are more productive in our day jobs, we're going to have more conversations. You can extract a lot of that intelligence. They also have a stake in Anthropic. They own 1.5% of Anthropic.
I'm glad to see you have a buy. I know you say it's a sort of a higher risk buy, but a buy and balance Palantir. Tyler, thank you very much, my friend.
Thank